Meantime, we are now just seconds away from jobless claims and getting the latest GDP data. I want to get over to our good friend in Chicago. Rick Santelli is standing by. Ahead of that, you got the Dow up about 40 points. All this could move around, though. You got NASDAQ off this morning. Rick, what should we be watching? What are you thinking about?
Well, I'll tell you, I think a lot of attention being paid to issues that I don't pay a lot of attention to. I'm a market guy. All the talk about what's going on in the Fed, once it starts to move the markets, it's something that I think I'll pay more attention to. Right now, I think for many it's a distraction, as many of the indices are near or at record highs. Interest rates certainly haven't paid attention to some of the issues. And believe me, it's something I've never seen, the interaction between the Fed and the administration. It's something interesting, and I'm sure it'll be in the history books. But until it's market moving, I continue to monitor things that are coming out in about 18 seconds. Our second walk around the block on GDP will underscore the tug-of-war in the economy between quarters that are weak and quarters that are strong, import, exports, tariffs. We have a lot of push and pull based on some of the issues of the day. We are expecting this number to improve slightly, and the revisions, our second look at second quarter GDP, are now hitting the wires. 3% was our last look. It now jumps up to 3.3%. But from a comp basis, that would still be the best quarter since September of 23, third quarter of 23. Consumption, always important in a consumption economy. It remains strong. 1.4, our first look. 1.6, our modified look. 1.6 will be the best consumption since the last quarter of 24, when it was well above. It was at 4%. Now, the pricing index, and maybe this has more relevance considering all the issues of the day the press is on with the Fed. Well, it remains at 2%. No changes there. How does 2% stack up? Well, 3.8% was the last first quarter of 25. The last quarter of 24 was 2.3. That pretty much gives you some good insight. And finally, let's look at the core side of the equation on the price index. 2.5, so it remains exactly at 2.5. No change there. The first quarter was 3.5. The third quarter of 24 was 2.2. Initial jobless claims have been awfully well behaved. Nothing changes there, Andrew. 229,000 from a slightly modified 235 that turns into 234. Now we subtract 5,000, end up at 229,000. 229,000, once again, just dovetails right in. I think the most important issue is we have 250,000 right on the nose on the first week in June. You have to go to October of last year to find a number above 250,000. So it's hard for me to get worried about this. And if this is considered the best real-time evaluation of the labor market, there's no issues that it's sending. It's not sending any smoke signals. Obviously, we've seen slowdowns in other areas, and there's lots of anecdotal evidence. Continuing claims, 1,954,000, another number that's stacked in there. Basically, all these numbers comp back to November of 2021. That's the last time we've seen numbers higher than this. Interest rates really haven't moved much. 4.23 and a 10 is minus 1 basis point. 3.63 and a 2-year is unchanged. Actually, I take that back. That is up 2. We closed at 3.61 on the late close in the cash market. We want to continue to monitor the stories about the Fed, the stories about Cook, and then look at things like what's the percentage of the market and a quarter-point cut for September. It's still in the 85%. It's hardly flinched, while all the press is going hog wild over these stories. Back to you.